Do you have $100 and you're thinking about investing? Well, it is a good decision. Many people think you need a lot of money to get started, but that's not the case. If you are a beginner, you can still get rich with the right approach without taking huge risks. So, you have to have an understanding of how compound interest works, picking smart investments, and using today's easy-to-use investing platforms. What really matters isn't how much you start with, it's just taking that first step. So are you ready to invest your $100? Let's get started. The power of compound interest. The primary component of investing is compound interest. You'll see why even a modest sum of money can eventually grow into something much bigger once you comprehend it. When your money accrues interest and subsequently begins to accrue interest of its own, this is known as compound interest. It has a snowball effect, meaning that the longer you allow your wealth to accumulate, the faster it will expand. Assume that you invest $100 and receive an annual return of 8%. Your $100 increases to $108 in the first year. However, you receive 8% on your initial $100 next year instead of simply the entire $108. Your total now stands at $116.64, and year after year this continues to occur. The effects of that compounding eventually start to build up and can have a significant influence. 10 years later, that $100 is worth $216. 20 years later, it is $466, and without adding another penny, it's more than $1,000 after 30 years. That is how compound interest works. Imagine now that you invest $100 per month as opposed to simply once. If you assume an average market return of about 10%, which is what the S&P 500 has historically produced, you may have more than $140,000 over the course of 30 years. This is the reason it's so crucial to start early. Time is on your side, even if you can only make modest investments. The results get bigger the longer you let your money grow. Where should you invest your $100? Knowing where to invest your money is the next step after realizing the potential of compound interest. You are looking for investments that are easy to manage, generate growth, and don't require specialized skills to begin. Index funds and ETFs. Index funds and exchange-traded funds, ETFs, are among the safest and most efficient investment options for newbies. Instead of picking individual firms and taking on unnecessary risk, these funds are made to track the stock market as a whole or a certain set of stocks. One of the most well-known index funds is the S&P 500, which comprises the 500 biggest American corporations, such as Apple, Microsoft, Amazon, and Tesla. This index has historically produced returns of about 10% annually, and despite market fluctuations, it has grown significantly over the last 2 years. You may spread your risk and make sure you profit from long-term market trends by purchasing a modest stake in each of these companies by investing in an S&P 500 ETF. The ability to invest even with modest sums is another fantastic feature of ETFs. You can start with as little as $10 or $20 because of the fractional shares that many platforms provide, which let you purchase a portion of an ETF rather than a full share. Dividend stocks. Dividend stocks are a fantastic choice if you're searching for a way to invest and generate passive income. These are stocks of businesses that consistently distribute a percentage of their profits to their shareholders. Companies with a track record of reliably paying dividends, such as Johnson & Johnson, McDonald's, and Coca-Cola, are well liked by long-term investors. Suppose you put $100 into a stock with a dividend yield of 3%. That implies that simply by owning the stock, you make $3 annually. Even though it might not seem like much, your earnings increase dramatically over time as you reinvest the dividends to purchase further shares. Because dividend stocks offer stability and a consistent income source, even during market downturns, many investors concentrate on them. And when you reinvest those dividends, you allow compound interest to work even faster. High interest savings accounts and bonds. Bonds and high-yield savings accounts are good options if you want to grow your money with no risk at all. They are perfect for people who prefer a more conservative approach since they give safety and steady growth, even though they don't offer the same big returns as stocks. Savings accounts with interest rates above 4% are available from online banks such as Ally Bank, Marcus by Goldman Sachs, and SoFi. This means that your money will grow more quickly than it would in a traditional checking account. For those who want instant access to their money while still collecting interest, this is a fantastic choice. Series 1 bonds and U.S. Treasury bonds are additional choices, particularly for investors seeking low-risk securities. These bonds are among the safest investments since they are backed by the government and pay a fixed interest rate over time. Bonds are a fantastic option for balancing risk in your investment portfolio since they offer stability, even though they don't have the same potential for dramatic development as stocks. Best apps to start investing. Thanks to modern technology, investing is easier than ever. You don't need a financial advisor or a lot of money to start. There are several apps that allow you to begin investing with as little as $1, making it accessible to anyone. If you're in the US, Robinhood is one of the most beginner-friendly platforms. It offers commission-free trading, allowing you to invest in stocks, ETFs, and even cryptocurrencies without paying fees. Vanguard and Fidelity are also excellent choices for long-term investing, especially if you plan to buy index funds or ETFs. For those outside the US, Interactive Brokers, IBKR, is one of the best global options, offering access to stocks and ETFs in multiple countries. XTB and Revolut are also great choices, allowing you to invest with minimal fees and buy fractional shares. These platforms make investing simple by offering educational resources, automated investing options, and user-friendly interfaces, ensuring that even beginners can confidently start growing their money. Why consistency is more important than timing. One of the biggest mistakes new investors make is trying to time the market. They wait for the perfect moment to buy, hoping to get in at the lowest price, or they panic when the market drops and sell at the wrong time. The truth is, even professional investors struggle with market timing. Instead of worrying about buying at the right time, the best strategy is to invest consistently, no matter what the market is doing. This strategy is called dollar cost averaging, DCA. By investing the same amount of money at regular intervals, you automatically buy more shares when prices are low and fewer when prices are high. Over time, this helps smooth out market fluctuations and reduces the risk of making bad timing decisions. Even Warren Buffett, one of the world's greatest investors, recommends this approach. He advises everyday investors to consistently put their money into low-cost index funds rather than trying to pick stocks or time the market. By focusing on long-term investing rather than short-term market movements, you reduce stress and increase your chances of building wealth successfully. Your challenge? Invest your first $100 today. Now that you know the basics, it's time to take action. Your challenge is to invest your first $100 today. Whether you choose an S&P 500 ETF, a dividend stock, or a high-yield savings account, the most important thing is to start. The sooner you invest, the more time your money has to grow. Even if you can only invest small amounts at first, staying consistent and reinvesting your earnings will lead to incredible results over time. The key to building wealth isn't luck, it's discipline. Are you ready to take your first step toward financial freedom? Let me know what you plan to invest in, and let's build a future of financial success together. If you found this helpful, then don't forget to like and subscribe to the channel for more amazing stuff.